So, welcome to this week's Forex commentary. And um, last week we discussed about the dollar index likely to reach for here, buy side, and after it runs through this consolidation here, right? And in fact, we're just a couple points shy away from target. I mean, um, I think post New York session on Friday, it seemed like we could reach here, but I think after the sharp run higher, about 30, 35, 40 pips ish on euro, started to consolidate. So I think that wasn't going to happen on Friday. So for this week's price action, well, this is the monthly time frame dollar index, right? And we're just going to drop quickly through. We're going to look at lower time frame charts and quickly just discuss price action. There isn't so much to talk about because this week primarily would be like a continuation of the last week's discussion, right? And we see how explosive the market is, right? And um, and your point of view was, when we're discussing about low resistance liquidity runs, and essentially what a low resistance liquidity run is just um, a run on liquidity with very little or no resistance in price. And you can see how we just opened on dollar index here and just continue to rip higher and higher. And it's very, very crazy because in in markets like this, there's a very, very high likelihood you do not even get a setup, right? And because the markets would expand overnight, probably consolidate in London and a little bit of expansion in New York, or probably just run the entire range between the overnight session and London session. And um, this is really, really, really crazy. Now, the whole point of outlining what a draw on liquidity is is pretty straightforward. Okay, if I say the market is gonna get to 108 and the market is currently at 10150, the idea is you can be profitable without prices getting to 108. Okay, it means you have a range between 10150 and 108 to make money off, right? And that's the idea behind it. Now, if you would always expect to take your trade off 10150 to 108 exactly, then you simply do not know what you're doing. Now, I'm saying it because I'm, using this opportunity to address, a kind of like conversation that was going on Twitter before I went to bed, and it was very, very upsetting. Okay, but for this week, our draw remains 107348. Right, dollar index is bullish, and we're still seeing momentum in the direction of the higher time frame bias. So we'll likely stay on. Okay, we'll stay on bias because there's nothing on the daily time frame or on the daily time frame, especially that is probably would I say instigating that okay we're gonna see say a shift in trend as per the macroeconomic data. Everything still supports dollar index bullish, so there's no reason why I want to be speculating if dollar index will be bearish. Okay, I mean, the worst that's likely to happen this week is since we've traded into buy side here, dollar index returns back into the range. Okay, that's just it. But dollar index is not bearish, very, very bullish, and we're still gonna reach for this high here and through. Okay, when I mean through, I mean if we go through the daily time frame, I think you see better in the daily chart. Okay, yeah, okay, you can see this fair value gap here. All right, so above these highs here, okay, we have this fair value gap here. So on the daily time frame DXY, what am I looking at personally? Well, Friday keyed off of this daily fair value gap, and we are in a very bullish market profile. And in market profiles like this, the markets would seek near-term internal range liquidity first, okay? And that's going to be a focus, near-term internal range. What be my near-term internal ranges? We ran through buy side here, this highs here, we ran through buy side, and prices return back into the range. And it's something I always talk about on here whenever I'm running my analysis, okay? When prices trades into a level of high time from liquidity, you'd want to hold on a bit. You'd want to, wait to see if they likely return back into the range. And if they're returning back into the range, you want to look for near-term key levels. For example, run buy side here, run buy side here, and on this day, prices return back into where a bullish breaker, right? And the honest truth about this price action is, I think we discussed this price action in last week commentary, how I talked about this fair value gap, but this daily bullish breaker, or you can call it this last two down candles and other block, because if we're looking at the 2 days time frame, okay, it's gonna look like just one auto block, right? Just depends on how you want to view price. And we closed like this on Friday, and we're discussing the XY on Monday here, and I created a safety net for those folks that would be thinking that prices could return to this gap first before an expansion, okay? And that's where logic is defined, really, okay? Those are the kind of conversations you want to be listening to. You want to learn how to manage your own expectations, because it's not wrong to think that DXY could reach here, because the market could literally do anything, right? Okay, and if you understand that the market can literally do anything, and everything is based on probability, so it means that there's nothing certain for sure, okay? And if you want to be making decisions, okay, it has to be backed by data, and then you have to have a solid and grounded, idea of price action. And what I said really was a run through and a close above this candle and this candle's high makes this a daily bullish order block, okay? And if you have a daily bullish order block and the markets are in a buy program, it means when you're going on Tuesday, you're going to be going on bullish. And if you manage to get in on the setup on Tuesday, it means you can hold for the short term or the near term, which would be um, this high here, okay? And that's really what trading is. Personally, I'm more like a short term trader, because um, when I miss, I mean, my swing opportunities, I know that when I'm running my analysis, I always do it on a weekly time frame, right? So if I can get in early in the week, I'm likely to hold for the weekly objective, right? And when the weekly objective is met, the bulk of my work is done, okay? And that's how I prefer to trade, because day trading can be really stressful. And look at this day, for example. I had my limit on euro on a 1 hour fair value gap, and we were about just a point or so away from my limit, and I missed the entry, okay? And it was really crazy, because I was sort of pissed. I'm like, ah, damn, not again, because I knew that if I missed the setup on Tuesday, I'm unlikely to take a trade until after CPI on Wednesday. And I really do not know how CPI is going to deliver, whether it's going to run against the high time frame buys, or it's going to run towards the direction of high time frame buys. And that's one thing I'm going to talk about today, okay? Because for every commentary now, I'm going to give like a lesson or two. So it's not just about the analysis, because the analysis can literally take me 5 minutes and the video is done. But I want you to listen and learn something from it. Now, when I was tweeting last year, I think last year when I started tweeting, I was talking about how the economic calendar influence, prices, and I always talk about three major things I always think about when I'm trading. First one is the high time frame draw. Okay, just like how we called out this price level first to be run, then this new price level subsequently after this one is run. And thing is, when you have a high time frame draw on liquidity, right? You need to figure out a way to get in on the trade. And one of the ways you can get on the trade is using key levels, the high time frame key levels. Okay, simply high time frame key levels. Okay, the high time frame breaker, order block, fair value gap, just know anything about that. Okay, and the other one is the economic calendar. For example, if we're discussing CPI on Wednesday, okay, I was speaking with my associate. We're trying to define bias for CPI, and I was like, CPI is likely to run against the higher time frame bias. That's on Euro USD, and what it means by that is, if CPI comes out bullish, it doesn't change my bias. I would interpret that as manipulation. Okay, because the high time frame draw on liquidity has not been met on the weekly time frame. That's on DXY or Euro, and CPI is coming out to be bullish on Euro. So my interpretation of that is basically manipulation. But if CPI comes out bearish for Euro and bullish for dollar index, that's sponsorship in the direction of the higher time frame bias. That's how I interpret it. So if I can figure out the draw on liquidity, I don't need to predict the news actually, because I could likely be wrong. It's a 50-50 scenario. Okay, but this one is more than 50, because we're backed by data, and we're seeing it technically on the chart via qualitative analysis. That's how you call it, qualitative analysis, and saying that okay, price is likely to move from here to here. Okay, so there's more figures, data, facts, and more probabilities backed in analysis. Okay, so I don't need to predict um, CPI, right? I just need to wait, or every other news event. I just need to wait and see how um, the market responds to the news. And after the news, I can now define what it means for me with respect to the higher time frame bias. Now, on Friday, I I sent a post, and this was the post I sent. Okay, if I check, if I open my Twitter account, this is my Twitter account here. Yeah, exactly. I said homecoming final weekly buy side objective. What a week! And if you look closely here, you can see there's a fair value gap here, which, and there was an old low, and one, my trading model basically is story soup. Okay, because that's the best way I can get in on trades. Okay, why is it the best way? Well, because every swing point basically is susceptible to a liquidity run like this. So the best way for me to get in is to wait for any kind of liquidity run on any time frame, depending on narrative, depending on situations in the marketplace, and that once I can get a liquidity run and I see a market shift on lower time frame, or probably I miss the lower time frame market shift, I can get an auto block like this. I'm just gonna return back to this auto block. I'm long already, and this is one of the best ways I believe you can take your entries, because um, a dealing range would only form after a liquid run. For example, if you look at this range from this low to this high, you can see how prices run through this low here. Okay, this was the initial low of the day. Market opened here, dropped lower, ran above this high, and then ran for sell side here. So this is a liquidity run, something this is what I'm talking about, right? So this is how daily ranges form. And if market is always returning back into ranges like this, okay, you're likely to hold for a continuation. But look at this level here, and market expanded. If you it trades back into a range and you're trying to capitalize on this order block, your stops are going to be run. That's what's going to happen, right? So that's the reason why if I want to take trades, I always wait for a run on stops first. And this was a breakaway gap because if you think the market was going to trade back into here on Friday, well, they weren't anymore on Friday, okay? Because you can see the order block here and this move higher. I think Euro USD ran about 40 pips from my entry, and I just moved stops to break even and held over throughout the weekend. Okay, so right now I'm just waiting to see what really happened. Okay, so if I were to discuss the price action on the intraday charts, okay, so we still have this price level here. We have this 4 order block. You can see that prices exactly um, is still inside this 4 hour bullish order block. And the fun fact is, even if prices run through this low, it's going to be like a 3 drive. Okay, there's a run below here and another run below here, and it's a 3 drive. So that's why, most importantly today, I'm going to blend in time. Okay, I'm going to blend in time if I'm going to have any execution again. Okay, because I'm actually looking forward to what prices are likely to do. Okay, if you look at this fair value gap here, okay, if you look at this fair value gap here, um, um, you can see this tiny gap here. Exactly. Okay, you can see the tiny gap here. You can see prices have essentially inverted this fair value gap, making this swing point high probability. Okay, and if that's the case, this level has potential to hold. But in cases when swing points like this that have potential to hold get run, okay, it's gonna be a total soup basically, and probably it gets run into this breakaway gap, or prices just run it slightly and reject. Okay, and that's why in London session you want to be referencing the opening price. Okay, how does the markets trade around the opening price? Do we see a judo swing post midnight New York, and do we see a market structure shift after um, the manipulation post midnight New York? That's the London session. Okay, so these are little details for day trading basically, and you should note that we are currently in the daily fair value gap. So we are at a high time frame support level, and our mind should be geared towards support and how price is going to utilize this daily fair value gap. Okay, and that's basically it. Okay, on daily time frame, on the 4 hour chart, and and these time frames. So a little bit of when we look at DXY, for example, on Friday. I think there was a news event on Friday, 8:30, and you can see how after prices ran below previous days low, the news came in and just expanded in direction behind time frame buyers. Now this is sponsorship for me. This is sponsorship. So all I did was get in on a lower time frame. I think if 5 minute very short block on Euro USD, yeah, and just allowing it to run. I was thinking that possibly we could just run for previous days high, and but prices never got to previous days high. And when they returned back into range on Friday, I wasn't really worried because this is permissible. Okay, when you have a run below an old low, which is an accumulation, and sometimes it follows with a reaccumulation into discount. and this would really shake off weak hand. Okay, so if you can't hold your trades, okay, because you see you didn't get to objective, and then prices are returning back and you can't hold, it's going to shake off. We can't hold that, right? So this is permissible, but what is not permissible is this current back and forth, right? This back and forth is not permissible, okay? Because once it reaccumulates into discount, everything that should follow will just be a rally, okay? But that's not happening. So we are in consolidation, and that's why you have to be patient, okay? You have to be patient because, for one, we traded into um, an old weekly high, this buy side here, and markets the markets are beginning to consolidate here. Okay, so this is where you want to be careful, okay, because we are now in a premium market. That doesn't negate bias. That doesn't say we're no more bullish on dollar index, okay, because regardless of how everything might trade early on, the draw still remains the 107 level on the weekly time frame. Okay, the 107,348. Okay, that remains the draw on the equity on dollar index. Okay, so let's move to euro. Yeah, I think there's something on euro. Euro we hit sell side here, but we have this level that markets could reach for. I think they already made a retest of um, this rejection block. Okay, so this is where the weekly low formed, but we still have sell side here. And why do I think the market is going to reach for sell side? Well, if you go through the monthly time frame and you look at euro USD, with all of these consolidations here, and you have the fair value gap here, it only makes sense that this is the draw on liquidity, right? Once you have the fair value gap just below an old low, the market is likely to reach for this inefficiency in price action, because when you think about it, this used to be an old breakaway gap. Okay, markets failed to trade into this gap and then began to consolidate and all of that. So now they're returning back into range. If they reach for sell side, most likely they're going to reach for this fair value gap. It's as simple as that. And this fair value gap is um, 03929, and our weekly objective is still a couple points above. We said 03929, somewhere around here. Okay, somewhere around here. This is where the monthly fair value gap is. So you can see this is a low hanging fruit target, okay, that prices could reach for, because on the monthly time frame we can see momentum on the high time frame, and we've already discussed how it is. So this is pretty much an obvious sell side target. So on the daily chart, so euro ran for previous day's high. That was on Friday, and this was the precursor to my setup. Okay, like I said, we're bearish, and market main objective created fair value gap. We ran above previous day's high. Of course, I'm looking to be short on euro USD. Okay, so today is likely to be a continuation, to me, in my opinion, because you can see this rejection. We stayed in the bodies of Thursday's candle, right? So we just like to see how normal session trades, basically, because today's Monday. You want to be short because we are at a discount. Please do not forget that we are at a discount, and markets could actually correct back into the range. All right, so we want to see how prices trade in the London session, and if it gives us a range to trade for New York, and then we're going to target the 104.42 level. All right, so I'm looking at other pairs. I mean, I think G was the outlier last week because of this price action here. seemed pretty rough, but we were outlining for this low here as the draw. So basically, once we had this close on Monday, it seemed very obvious that okay, GU has no business anymore here, because this is a bearish order block, and this became a propulsion block once this candle closed below this level. So everything that remained was GU utilizing this propulsion block to run into sell side here. I think pretty straightforward. Okay, that's the reason once you have bias, the higher time frame draw, you can study um, the chart and interpret all of these things, because by itself, this could the next candle could rally and run for buy side, and after that the market will start tanking, and then you'll be like, why did you not see it? That's why there has to be like an element of patience in your analysis. You give room for error, and if you want to give room for error, the best way to do it is staying away from the market, because in periods like that you're likely to be wrong, you're likely to make the wrong decision. So your best bet is just to basically stay out of the market, right? So anyways, GU currently, we dropped into the high time frame objective, but I don't think a weekly sell side liquidity pool is going to be run like this. I think if we trade a little bit back into the range, more sell side here. Okay, so I want to see more sell side here, and this is still relatively equal to me. So a run into the range a bit, we could see more sell side into this weekly bullish order block, potentially running this low here. Okay, because there could be a lot of buying interest here at this weekly order block. So sell side rests at this low. So if you found this one insightful, kindly share with friends. I'm going to post it to my Twitter and YouTube and every social platforms, because I'm a full-time creator now. Anyways, be safe.